it's unlikely, I would say, that we'll see another shutdown. And I don't think you're going to get that type of negative for the economy going forward. We did see a sell-off in the markets yesterday. A lot of that was based on the yield drop. So we've seen a very dramatic drop in the 10-year yield, and that's kind of putting investors on edge. Investors like consistency. They like slow moves. So just like we saw when yields were pushing north to 1.75 on the 10-year, that was freaking the markets out. Same thing when you've had such a dramatic drop to the downside. Now, the drop yesterday definitely was fueled by the Delta variant concerns. We're seeing a massive rise in cases here in the United States compared to just a few weeks ago. But it's unlikely, I would say, that we'll see another shutdown. And I don't think you're going to get that type of negative for the economy going forward. I would just point out that at this point, at least in the US, there's enough vaccinations where everyone that has wanted to get one has gotten one. And if you don't want to get one, I think the outlook is like, okay, that's your choice, which is valid. But again, at this point, I doubt they'll shut down the economy on a political basis. That would be very, very kind of not good. Yeah, so there's no doubt that there's declining confidence, right? So not only do you have the rise in the Delta variant, and this is something I've talked about in the last interview I was on with you, David, is how you fear that after this huge reopening, there's some sort of air pocket that the economy is going to have to go through, right? So you have everyone saving a lot of money, right, during the COVID lockdowns. Now they're spending it on vacations and going out to dinner and going to parties and this and that. And the question is, well, what comes after? So you let's say you save $1,000 in that period and you spend it all on vacations or whatnot. The question is, what's the new reality after that? And I think that's part of it too, is people are starting to say, okay, well, you got the Delta variant, which is potentially hurting the economy. Then you have this air pocket as well. And that's creating this kind of yield curve slope down that could be an issue. The one thing I'd love to show you guys here is this chart on the 10-year yield. This is a level I'm looking at very, very closely. So right now, the 10-year yield's at 1.159. And just below right here, there's a 50% retrace from the high from this low. So again, I'm looking at that as a technical level where I do think yields will bounce. That level's right around 1.12, so we're very, very close to that. And I do think ultimately yields are going to head back up. I think this is kind of a combination of people were over leveraged on the long side of yield, so you had to see a flush out just like we've seen on Bitcoin. And then you also had the Delta variant pop up, which has made the yield here drop even more. But eventually, the printing of money is going to win out. In my opinion, there's no way around it. The printing of money will win out and yields will start to trade higher again. So number one, it's important to kind of take note of where the futures are in the green. So the spiders right now are just up 0.3%. Which to me is somewhat of a weak bounce considering the big drop yesterday. So again, you're always at these highs. You're going to have this kind of buy the dip mentality where you get a big drop and people say, oh, this is a drop and I haven't gotten all in, so I'm going to buy the dip. And that's the initial phase off of an all-time high. The one thing that concerns me here on the spiders, and you can see it here on the chart, is that we have broken again below this trend line that stretches all the way back to 2020 lows. And anytime you have a major pivot low like the 2020 COVID low, and it stretches and basically connects through all these lows, when you break it, you need to go on alert. One of the things that this recent bounce did, which occurred yesterday, is it confirmed this breakpoint. So you see, right, so over here we closed below, but you never had a secondary close below the trend line. You went right back up into the mix. 2 days ago, or on Friday, we closed below the line. And yesterday, we actually closed below that low. To me, that's a term I coined called confirmation of a breakdown. And that's something that even with a small bounce today, has me in a very negative bias on the S&P 500.
Couldn't that also mean that the action was just oversold and that you're due for a technical bounce up? Is that possible?
Yeah. Absolutely, absolutely. But remember, technical bounces are basically situations where people are saying, okay, well, we've fallen X amount and then we're going to buy it in, or buy up to it. So I think that's exactly what you're seeing today. You're seeing this kind of technical retrace bounce. If you want to talk a little bit of technicals on this chart, you can see that there was this little pivot right here. We kind of came right into it. So you should get a little technical bounce. That's not unusual, especially near all-time highs. My question is, even if we bounce up, this line now becomes resistance on the market. And my analysis says that even if we do bounce for a few days, eventually we're going to roll down and start making lower lows.
Okay. And so today, would you be on the long side then on individual securities, or are you staying out today?
So as of now, this is how I've positioned myself. So going into the last week or so, I've continued to accumulate some shorts on the indexes, expecting a bigger multi-week, maybe multi-month correction in the markets. However, yesterday I did pick up some airline plays, and I was very close to picking up some cruise lines. Let me show you the Jets ETF here, which is the airlines. And again, this to me was something, and this is a pure technical play, right? Because the fear yesterday of the Delta variant, you think, oh my goodness, shutdown maybe. But if you look at the Jets ETF, which represents the airlines, it's been in a steep downtrend for the last month to 2 months. And look at this level that it got to yesterday. I mean, this is just a beautiful support area right here. So I actually did some buying on this, and so far it's up. I also picked up some DAL call options as well on the same basis that you hit some technical support right here. So this is very short term for me. Ultimately, it wouldn't surprise me if after a bounce in the airlines, we see another move to the downside in them. But on a short term basis, I did go long airlines yesterday on the weakness because of the technical chart. Yeah, so I think that overall airlines are going to do fine. Again, I just cannot see, and I know Canada has done it differently, but in the U.S., I cannot see another shutdown. I think that's very unlikely. So I think that in general, people are going to travel. I think it's not as bullish because of the Delta variant, right? Because people are still going to be a little bit nervous. But for the most part, here in the U.S., we're so fed up with being locked down. The politicians are unlikely to do that again. I still think there could be mask mandates put into place to kind of protect against the Delta variant. But again, to be locking people down and that situation is, again, very unlikely. So I think the airlines, you're not going to see this insane surge like they were hoping, which is why we've seen the airline stocks come in here. But it'll go back to a pretty solid level that will be fine for them.
Speaking of insane surges, we haven't applied those two words to Bitcoin in quite a long time now. Gareth, what's going on with cryptocurrencies? Can we pull up a Bitcoin chart?
Yeah, let me take a look here. So Bitcoin is at a pivotal place, right? So if you look at Bitcoin, you have the 30,000 level, which was that target from this initial head and shoulders breakdown. We hit it perfectly. We then chopped around. We then pierced 30,000 here, but never closed below it. And here we are today below that level. So what I would say is your simple analysis here is watch to see where Bitcoin closes today. If it closes below 30,000, it very likely could start a cascade event of a second deleveraging that takes you down to 24,000, right around 24.4 actually is the exact level. And then if that breaks, you're going to sub 20,000 on Bitcoin. So literally today's close on Bitcoin could dictate whether or not it goes straight down to that 24-ish thousand and then potentially sub 20,000 level.